What do you do when the market goes crazy? I've got a great guest on the show today who has a lot of experience in the multifamily space. He leads a multifamily mastery, and he is one of the premier real estate investors in the world. I'm fortunate enough to have live from Florida today, Rod Khleif on the show. He's back. He was a guest on our show about 2 years ago where we deep dove into multifamily real estate. But today we're going to talk, more broadly about what the heck is going on. Rod, good to have you here on the show, man.
Oh, thanks, Clayton. It's awesome to be back. Let's have some fun, and let's really have a conversation about what's happening right now, the fear and the potential impact on our businesses. And so, yeah, I host a mastermind, as you mentioned. I host it's called the Multifamily Boardroom, and there's about $7 billion in assets represented by the members of that group. And we meet monthly, and our next meeting, of course, is about this coronavirus business and the impact, the potential impact on our business. I mean, forgetting, the personal impact and the fear associated with that. But, what's the impact on us from a business standpoint? And, I will tell you, I've been saying that there needed to be a catalyst what I've been saying is that we're going to run ahead.
You got
yeah. That's about my point. I've been saying unless there's a catalyst, I think we're good. Well, we just got a catalyst, and so all that's out the window now because this is impacting everything, every aspect of business, the supply chain, travel, I think it could really turn into something massive. And I was just listening to an interview, and I don't remember the gentleman's name, talking about.
The Joe Rogan podcast.
On the Joe Rogan show, that this has just started, and that that we can expect. This is not like his analogy was that this is not a blizzard. This is a season.
Just off the bat, how serious is this? Is this something that we need to be terrified of, or is this overblown, or how do you stand on this?
Well, first of all, you have to understand the timing of it in the sense that it's just beginning. And so in terms of what hurt, pain, suffering, death has happened so far is really just beginning.
And that it's going to be here for at least a couple of months, maybe longer, and it could be very, very significant. So
yeah, I'm in Europe right now, and I just had my mother-in-law and father-in-law leave because of the travel ban, and they got out ahead of time. U.S. citizens, and had to get out in time. We were in Italy not too long ago, and it was like a ghost town. Our Uber driver said this is the first fare I've had in 10 days. There's panic. No one's leaving their house. Restaurants were praising us for coming in. They were giving us extra drinks because they have to keep the tables 1 meter apart, and so it's been a nightmare. It's hitting the elderly population very hard, and in the real estate world, Italy is one of those countries suffering from an aging population crisis right now, and so to have this going through the aging population in Italy and other parts of Europe and around the world. And then not to mention what it's doing to mortgage rates. You have in Italy right now, the government said, hey, mortgage reprieve. So if people have late payments because they can't work, we're going to have, no one's getting a foreclosure. You're going to allow these late payments, work with them. I have to imagine the Federal Reserve is already thinking about this in the United States. So we could see ripple effects.
Trump started, is trying to pass a bill, and in his State of the Union or his talk last night, he's trying to pass. I'm just trying to find my notes from it because I took some notes as I was watching TV. Of course, the travel ban from Europe for 30 days, but the highest risk was elderly. But I will tell you, and so I called my brother last night. My mother's in assisted living in Denver. I said, have you gone to the facility? He said, yeah, they don't even have hand sanitizer out there for people to come in. I said, well. That's just insane. Trump, of course, is trying to calm the population, and rightfully so. But they were talking about deferring tax payments and payroll tax and SBA relaxing their program to provide temporary loans. And so they're anticipating this to be a significant financial impact on the country, and I don't see how it couldn't be. Yeah. I mean, it's already impacting, my business because I do live events around the country. I've got one coming up in May, and we're still on track to do it. And I'm going to go live to my audience later today, actually probably Friday night or Saturday. and we're just going to keep an eye on what Disney does and what Universal does. They're still open and operating, and of course they get people from all over the world. So that's kind of going to be our barometer for that event.
Yeah,
and of course
you're in Florida, so the event will be in Orlando. I was going to ask
Orlando.
you more broadly about your business. I mean, as a multifamily investor, and of course you had, we talked a couple of years ago, but a lot of single families. You do a lot of multifamilies now. I think you still have some single families along the coastline.
A handful. I've got a handful, but my business is primarily multifamily. We bought 1,000 doors last year, Clayton, and we've got 800 doors under contract right now. And we are very conservative anyway because of what happened to me. I don't know if you recall my story. I lost $50 million in 2008. I mean, I crashed and burned. I lost everything. And because of what happened to me, I'm doubly more conservative. And so we've got, big operating reserves. And I just had a conversation literally yesterday with the head of my acquisitions team. And we're even going to double down on our operating reserves. And just because, when these things happen, it's going to impact your residents. It's going to impact the rents coming in. And even in 2008, the beautiful thing about multifamily is domestically the average was about a 15% pullback. I shudder to think it's going to be this situation is going to create something worse than that debacle in 2008.
No, that's a great point because I look at where I invest and I look in those markets in the single family and duplex space, which I don't want to say anything's recession proof, but historically looking at those areas where you have high job demand, you're away from the bubble zones, so to speak. You're in areas where you have low crime, expanding job market, population growth, all of those things, big businesses coming to those areas. And it's a lot different. I feel like it's a lot different than 2008, where you had a lot of people who were massively over leveraged, certainly in the single family space. People were getting all these, properties, they couldn't afford the mortgages. And then of course the bottom fell out and their tenants couldn't afford the rent. So what do you see maybe that's different this time than 2008?
Yeah, good question. Well, everything you just said is accurate. And I will tell you, when we're doing our analysis on a property, one of the biggest things we look at is not just business diversity. We look for employment sector diversity. So we want to see, and I look for recession-resistant employment sectors.
And what does that look like? That's fascinating.
Well, so let me give you an example. So when I got crushed in 2008, most of my residents were either in retail, which got crushed, or in they were contractors. They were drywallers, electricians, plumbers, roofers, painters, and all of that. And that fell off a cliff, as for a few years. Remodels weren't happening. New builds fell off a cliff. And so none of them had work, and there were some other factors for me here in Florida that caused me to crash and burn. For example, Florida has no state income tax, so the property taxes are higher. I had properties up and down the Gulf Coast, so I had wind insurance, flood insurance, which all of this impacts cash flow. But the biggest thing for me was logistics. I had 800 houses, and I have nothing against houses, but definitely against the way I did it, which was I had houses 2 hours north, 2 hours south, and everywhere in between, and the logistics didn't make sense. Here's why. I had apartment complexes as well at that time. If I sent a maintenance guy to one of my apartment complexes, we could stockpile parts. So we'd have plumbing parts, the guts for plumbing, the HVAC, the appliances, the locks, and a maintenance guy could get in and out in an hour and be done. Well, if I had to send him to a house that was an hour or an hour and a half away, he'd have to go see what was wrong because every house is different, then find a Home Depot or a Lowe's, come back, and what would take an hour at an apartment complex took all day at a house. And you multiply that times 800, and it just logistically did not work. And one thing that I took from it, because, I call it a seminar, I learned from the experience. It was a painful freaking seminar, but I learned. And one of the things I learned was to really pay attention to the types of industries that are around the assets that we're buying now. And are they recession resistant? For example, we've got an asset in Beaver Creek, Ohio, as an aside, got destroyed by a tornado, and we're almost rebuilt now. 101 families had to move, the whole complex. But But near that complex, there is a military base. Now, normally that would be a red flag for me, but this particular base is a tech research base, and I know damn well it's not going anywhere. Okay, so that's number one. But there's higher education there. There are colleges. There's healthcare, big hospital facilities. These things aren't going to get hammered in a recession, and so that's kind of what I'm talking about.
No, I love that. And I hope my audience pays attention to that, because it's what we try to preach here on this show. Those are the homes that we're building this year, over 400 of them, duplexes and single families, right in those areas of Texas and so forth, where have, new universities, or not new universities, new hospitals, universities with overwhelming demand. Out in West Texas today at one of our projects, we're here for days going through just so many different new construction projects that we're working on. But this is one subdivision that we're building 31 units right now. The team is doing an amazing job. And so these are about 60 days away from being completed right now. I know when you look at them, you're like, how is that possible? But once we pour the slab, because there's no basement, it's about a 90-day turnaround from once the slab is poured. So just over there beyond that dumpster, you can see some of the other slabs that are being poured. And across the street, this will also be all developed as well. So I'm gonna walk inside here and check out the progress. Super exciting to see this coming along. So a diversity, that's why I was curious what you meant by that diversity of employment. And that's exactly what we try to preach here. Because if you have just one oil refinery and everyone's employed by that one oil refinery, God knows what happened to oil last week. All your tenants are out of jobs.
Towns. Yeah, we call it one-horse towns. We do not want one-horse towns, because if that horse gets sick or dies, you're in big trouble. But beyond that, take a look at the types of employment sectors that are around your assets as well. Because again, and then think to yourself, what happens if there's an economic pullback? Will those particular industries or types of employment be impacted? And that's kind of what I'm talking about. So I take it even deeper than just, of course we look for an emerging market. We look for population increasing, income increasing, jobs increasing. All of that stuff's got to be there.
Right.
But again, I go deeper on that, because the number one thing with rentals is jobs.
Right.
Period.
Right.
And so, that's why, again, I learned from my seminar in that regard.
So let's just run down some of the headlines today, Rod, and get your perspective on how the stock market and what happens in oil and the stock market and international travel could have an effect on real estate. Germany right now, 70% will be infected according to their government. Tom Hanks tested positive.
Right. Crazy.
The NBA has suspended their season. We also have the U.S. Capitol is now shut down. People will not, the public is not able to go and visit there. And we just had the stock market has been shut down. Wall Street shut down the stock market because it dropped another 1,700 points. The circuit breaker halted the sale of stocks.
Trading today.
So that was just about an hour ago. So as real estate investors, Rod, what are the things you're looking for your staff researching right now to make sure you can weather this?
Well, I told you that before we started here, that I actually have my staff researching this as we, in fact, I just got an email from them. Hold on. Okay, no, it's just to update me. So I have people researching this right now because and staying on top of it. We're trying to stay on top of it as well. And you just, since I watched the news this morning, you just told me a couple of things that I wasn't aware of. So it's like changing hourly. And so, we are going to assess a liability number. That's always a concern as a multifamily property owner or a property owner in general. Are there any liabilities associated with this virus potentially, in protecting your residents? So that's going to be a conversation we're going to discuss on my mastermind meeting. Obviously the economic impact. Again, this is going to have an economic impact, and it's going to be sizable. And so, again, God forbid it's anything like 2008. I don't think it will be, because again, like Trump said last night, the economy is the strongest it's been in a long time. And I believe that. Unemployment's at an all-time low, but there are people already being laid off. I have read that as well. So, you have
airlines stopping flights. And so they're not training new pilots, not taking on new trainees. And so you're right. So employment could be hammered in a way that we didn't expect.
Right.
Yeah.
I think it's likely to be hammered. Okay. I don't think that's a I'm certain that that's going to happen in some capacity. Let's hope that it's short-lived. Let's hope that that this thing blows over quickly. But I'm hearing that yes, we have delayed what's happened, but we have not prevented it. In listening to that interview on Rogan.
And we already have, to your point, Rod, we already have just now breaking is job losses. The first round of layoffs from coronavirus have now hit. So we're seeing this now at airlines, hotels, travel agencies, event companies have all been hammered hard. As you know, all of these events are being canceled. You're putting on an event, and
I'm who knows what's going to happen with mine. I don't want to cancel it, but if there's going to be a danger, and again, I'm going to watch what Disney does. If Disney shuts down, then I'll definitely cancel it or postpone it. Really, I won't cancel it. I'll just postpone it. But
to get you out of here, to get you back to focus on your company right now, and you've got to talk to your audience, and I want to be respectful of your time. Where do you go from here? Do you do anything drastic, or do you just remain calm, just kind of analyze how your residents are responding in these different markets, jobs in these particular markets, healthcare in these particular markets?
I think the biggest thing we have to pay attention to and for ourselves is to not get caught up in the fear. Because again, what is fear? The only thing we can fear is the actual emotion of fear. That's all we should fear, in my opinion. And so, certainly if you're someone with a suppressed immune system, then you should quarantine yourself until this blows by. And if the elderly, no question, there should be things put in place. But until we know more, I'm having a leadership meeting on Tuesday with my entire team to discuss the ramifications on not just our acquisition business in the multifamily space, but also the thought leadership business. I've got a significant thought leadership business with our, what equates to 7 live events a year that we do. So, we're talking about maybe live streaming. We're talking about, solutions, adding more value in some fashion, because it's going to certainly going to have an economic impact on our business and my team. So I would tell people, don't get caught up in fear, but don't sit there and hide your head under the sand either and expect this to go away without some ramifications. So start, proactively evaluating your personal situation, business related and personal, and make preparation to, in the event things do get worse, so that you're not caught blindsided.
Well, I like that we ended it on a positive note, which is to not be fearful. And that's, people can go crazy and lose their heads in scenarios like this. So I appreciate that.
They already are.
Yeah, I know it's scary, and we have to remember history. I was a history major, so just look at history and use that as a guidepost for these types of moments. Well, Rod, it's been great having you back here on the show. Hopefully, we'll have you back in a few months when this all blows over. We can talk more multifamily and buy and hold and strategies for 2020 and beyond, my friend.
That would be a whole lot more fun, brother. All right, well, listen, take care, have fun over there, and thank you. And it was great seeing you, my friend.
Yeah, thanks so much, Rod, and thanks to all of you for downloading and subscribing. And, don't lose your head in these situations. Go out there, take action, become a real estate investor. I still believe it's the #1 way to build wealth. You just got to be smart about it. We'll see you next time, everyone.